What's up, everyone? It's Scotty with Money Investing. So thank you so much for joining in for yet another live stream. We kind of do these for Sunday nights, kind of preparing you guys for the next week because there's a lot of stuff happening. Of course, with the earnings, they're going to be on focus. So earnings are going to be super, super important. And I hope you guys had a great weekend. And thank you so much for joining in. Welcome on board. And yeah, we'll go over all the earnings that are coming up. Kind of go over the technicals for these companies, and I'll take any stocks that you guys want me to go over the technicals and fundamentals very quickly. The futures market is open, pretty much flat right now. So Nasdaq futures slightly down about 10 basis points. We got the Dow Jones future here. Here, hold on one second. All right, there we go. We got the Dow Jones futures. Where are they? So they're all the way down here, down about 12 basis points. Nothing crazy, just about flat. We got the S&P 500 futures also down about 12 basis points right now. So welcome. It was kind of a tough day yesterday because of a couple of games that I was watching, of course, for everybody who's from India. India obviously lost from Pakistan. And for anyone who's a United fan, we had a really tough game yesterday against Liverpool, right? But nonetheless, we're here today to start off another week. This right here is going to be all the earnings. Oh man, United was really bad with everything that they were doing. But anyway, so I put out a couple of videos earlier. Went over this entire chart. Of course, these are all the companies that are reporting. So S&P 500 is going to be influenced by the movement of these companies because it's market cap weighted, and so is the Nasdaq. So both of those will have a lot of seeking for direction, so to speak. So they are going to try to figure out where to go based on the earnings, right? So we basically rallied after the banking stocks, and of course financial stocks rallied on earnings. So we saw that it was a really good catalyst to push us back over to new all-time highs. But now we've got big tech, some of the heavyweights reporting this upcoming week, starting with Facebook, of course, Logitech. Those are two companies that I'm personally interested in. Facebook, I'm personally invested in also, so I would be very interested to find out. And those are some things to watch for, right? Apple's privacy changes, their daily active users, their user engagement, their monthly active users, the average revenue per user, and of course their future guidance as well, holiday spend, advertising revenue. All those things are super important for Facebook as well. Let's see. Let's take a look at here before the markets open on Tuesday. UPS, General Electric, 3M. 3M, we got Lockheed Martin, JetBlue, Raytheon Technologies, and Waste Management also reporting. So none of these companies that I'm personally invested in, but super interested in learning more about these because they also kind of pertain more towards the recovery of the economy as well. And of course, on Tuesday after the close, we've got a lot of companies like Advanced Micro Devices, Microsoft, Alphabet, Visa, Twitter, Enphase Energy, Robinhood, Texas Instrument. Of course, most interested in AMD, Microsoft, Google, and Visa, and Enphase Energy. So those are 5 companies that I'm watching very closely. And of course, on Wednesday before the open, we got Boeing, General Motors, Coca-Cola, McDonald's, and Spotify. And then after the markets close, all right, yo, bro, I'm a new member on your Discord. Can you please check DM Desktop Metal? Yeah, I'll definitely do that. And thanks for joining. I'll definitely take a look at that. Gabriel, no, so I'm still bullish on NEO at the moment. I've mentioned this before, and the only thing that has changed since the previous analysis is the risk related to the Chinese regulations, and that's put a lot of pressure on the technology stocks. So it's not so much about the views changing, it's about keeping up with what's going on in the market. And that's one of the things that I've also mentioned in the past, right? Nobody's analysis opinions is going to be set in stone forever. Things change in the market by the minute, right? Regulations change, policy changes, patterns change, fundamentals change. So why is your analysis going to be the same this entire time, right? That's why we have to reassess and kind of engage with that new data coming in and understand whether this is appropriate, whether this valuation is appropriate, whether the company has more potential to grow forward, or whether the company is kind of cutting guidance and is going to decrease the valuation. So the overall thesis is still the same, but the analysis will change as the time goes on, as the company is changing up their own guidance, their own delivery numbers, and of course the policy, the regulations are changing as well. So it's a constant learning process when it comes to analysis in general. So before the markets open on Thursday, so 2 days, Tuesday and Thursday are going to be very important for the markets. Monday a little bit with Facebook coming in, but Thursday we got Shopify, MasterCard, we got Amazon and Apple, 4 big tech companies reporting their earnings. And then on Friday, we've got Energy, ExxonMobil, Chevron reporting, along with AbbVie, also kind of competes directly with Vertex Pharmaceutical. So we'll be watching those companies as well. This right here is going to be something that I created for all of our members. So this can be found on our Discord as well. Essentially goes over the revenue and the EPS estimates. And this right here is going to be the growth year over year for those companies, right? So this is the expected growth if the companies report these numbers. So you'll notice the revenue 30 billion, 4.1 billion, for Facebook, AMD, respectively. That's going to be a 39%, 46% growth year over year. So we can take a look at this number, and of course, when Facebook reports, and kind of compare the actuals with the estimates, whether the numbers come in higher than 30 billion, lower than 30 billion, and the EPS comes in over $3.19, or lower than that number, and that's obviously going to be, resulting in that year over year growth as well. So really good way to keep track of these 10 stocks and what they're actually reporting for the earnings next week, which is going to be very, very interesting. All right, let's just switch over to our charts here, and let's take a look at the markets. So let's see. So Caddy Facebook rarely has gone below its 200 EMA on the daily chart. What is the risk that it could move much lower from here? So let's start with Facebook. If you kind of scroll back on the chart, let's take a quick look. And you're right, it's rarely gone below that 200 simple moving average. The last couple times it went down there was back in 2018 because of the US-China trade wars. This right here was back in March 2020 because of the pandemic, and since then several times, once here, twice, 3 times, 4 times, and right now 5 times, we perfectly validated that support, right? So you're absolutely right about this analysis here. If you take a look at the weekly chart, it's a very similar process. Instead, it's not the 200 SMA, but it's the 50 EMA where it's perfectly validated, and the couple times we've actually broken down is during the 2018, again, US-China trade war, and this right here was the March 2020, February 2020 pandemic. And since then, we've just perfectly validated that 50 exponential moving average. So I remain confident that Facebook usually does lowball their numbers when it comes to the revenue, the EPS, and they usually end up beating their guidance. So I would not be surprised to see the fundamentals improve, right? The numbers get better, but how the stock reacts to that is open for discussion, right? And a lot of it is going to depend on the future guidance for these companies, because a lot of them have actually withdrawn a future guidance. Apple has not issued a future guidance in a very long time. So really, a lot of the movement is going to depend on what the future guidance is, because that's really the reason why Snapchat, dropped close to 26% on Friday, because I would say like the revenue was more or less in line with the expectations. The EPS was actually a beat, and the daily active users grew, but the company's lower guidance resulted in a drop of 26%. So the future guidance that these companies give us is going to be very, very important. And of course, Facebook more than anything else, because of the Apple's privacy changes and how much of their advertising business is getting affected by that. So yes, strong future guidance is very important. If earnings show strong ad revenues, I think the stock could pop. So it seems like good risk rewards trade-off. Yeah, I mean, right now we're just trading at support level. The RSI's come down, the MACD's come down. So I've been buying Facebook. I will continue to buy. And of course, very, very interested to find out what those earnings look like for the company. But 319, 315 is going to be that support level near term going into next week, and we've perfectly bounced off of that level every single time. So we'll keep a close eye at some of those support levels. All right, let's see. So there's one stock that I've been researching over the weekend. I spent a lot of time going over this company. It's not in the tech sector. It's not in sort of like anything that we've invested in. It's something completely different, and I will be doing a complete video on that very soon. But very excited about that. It's in the cannabis space, so we'll be going over that stock. And I've been doing a lot of research, and out of all the companies that I've researched in that industry, that one has the best financials I've ever looked at for any cannabis stock. The best financials. So we'll be doing a complete research and analysis on that. It's not ACB, it's not Tilray either. So ACB, I feel like it's just been selling off for a long time from highs of $19. That's the 52-week highs, but at one point it was highs of $162. So yeah, no, it's not Aurora or Canopy Growth either. But anyway, let's just go over, and I will break down that stock. That could be my potential position here very soon, and we'll talk about that in more detail. I'm just working on the video here. Let's take a look at eBay. So eBay also reports earnings. Let's see here. on, I believe, on Thursday, or actually before Amazon reports. So on Wednesday, they report their earnings after the markets close. But this has been a very, very strong growth, 5.75% on Friday, and year to date, the stock is up over 60%. So a very, very strong number here for eBay. So in my opinion, right now we're just trading at near all-time highs. It's perfectly bounced off of that 200 SMA a couple times in the past. The RSI is overbought here at 73. So Supa, Vote, thank you so much for the donation. Thank you, I really appreciate that. So eBay, so a very, very strong growth, hitting a new all-time high pretty much at $81 a share. So right now, I just depends on the earnings and where they go, right? The resistance is quite unknown because we're trading at all-time highs. We've never traded at these levels before. Just be mindful of the RSI and the MACD. It's a little bit on the overbought side. Support level is going to stay put at either of those moving averages. So 50 all the way as low as that 200 SMA is going to be that level to watch as a support. All right, let's see. So Pubmatic, PUBM. Pubmatic also dropped on Friday, down about 10% here. So these companies dropped, right? So after Snapchat's earnings, a lot of companies dropped, including Trade Desk, including Pubmatic, including Twitter, including Facebook. So a lot of companies that have anything to do with social media, content creation, or developers, app publishing, and so on and so forth, kind of dropped. And Pubmatic was also, as a result of that, pulled back here. So support level is going to stay put at these levels at close to $25. Resistance is right now in the near term going to stay put at that 50 EMA. And I'm also doing some more analysis on Pubmatic. So we do have that on our fundamental analysis watch list. So Pubmatic is right there along with all these other companies. So we'll continue to watch that stock as well. So we'll keep a close eye on this. Still, the short interest is high, over 13% for Pubmatic. So it's still being shorted right now. But support level near term $25, resistance at $20 for the company. All right, let's take a look at Teladoc. So TDOC. So Teladoc does report earnings later on October 28th, and 138, like right around those levels, is going to be the resistance for the company. So kind of aligned with that 50 exponential moving average right there. You'll notice that we are somewhat forming a bullish divergence. So coming in from like here, you'll notice that the RSI has been making higher lows and the price itself has been making lower lows over here. So that was the lower lows and the higher lows for the RSI as well. So we're seeing a little bit of bullish divergence being formed for the company, and of course it's come down substantially from highs of $308, over 50% drop. The valuation starts to make sense here after this drop, but $138, $130 is going to be that support resistance level to watch. Near term level is going to be 148. So I'll actually go ahead and put this level right there, 148 levels, and 130 is going to be a support level to keep in mind. All right, let's take a look at WM. Is that Waste Management? So Waste Management, I really like. This is a company that's kind of like in that defensive sector. Pretty much, Waste Management will always be needed. Industrial services belongs to that. Revenue's been very stable. They've got a decent yield of 1.4%, 39-40% year to date. So they benefit from the reopening of the economy, and just I like the business. It's very stable. It's needed. It's a defensive stock to begin with, and just a really strong rally recently in anticipation of the earnings here from next week from the company. Jump of 11.7, 12%. So resistance is quite unknown because we're trading at all-time high here. But right now the RSI, you'll notice, trading well over 76, and so is the MACD. So I would be very careful just kind of buying at these levels just for the sake of the earnings. That's another thing, right? You'll notice that what was I saying? I lost my chain of thought. That once the stock is already trading at near all-time highs and their RSI and the MACD is much, much higher, the risk-reward ratio is quite low, right? So most of the move has already happened from these levels, 12%, 11% move. So support level is going to stay put at that 50 EMA. So we've perfectly bounced off of that level here, all the way as low as that 200 simple moving average. And I do really like Waste Management's business as a whole. All right, let's take a look at Amazon. So Amazon has just been giving us a tough time for the most part. Just over 3,300, dropped to 2.93% on a Friday. So I've already mentioned some of the things to watch for Amazon for for their earnings. Some of them are AWS growth, so Amazon Web Services. We also need to keep a close eye on their hiring costs because that's a big expense for the company. Perhaps if you take a look at the top 3 expensive, salary and wages definitely is one of the top 3 expenses for a company. So we have to keep track of that as well. And of course, the updates on COVID costs, because the company is spending still billions of dollars in COVID related expenses, logistical costs, so what their update is for logistical networks. But nonetheless, I remain bullish. 3,300 is going to be that near-term support level to watch. And 3185 is going to be that next level to watch. So this right here was the after July's earnings call, right? We dropped over 7.5%, so pretty steep drop for Amazon. So we sold off all the way down to that level. We ended up going back up to fill this entire gap, right? So we jumped over 11.6%. And since then, we've just been consolidating. So I'm not too confident. I'm confident on the fundamentals of the business. So I'm confident that the company is still going to report strong growth. However, we are potentially going to see some type of a decline in earnings per share of 28%. That's the only stock that we saw the year-over-year growth decline because of COVID-related expenses and everything the company is spending on. So I do remain bullish on the actual business itself, but the stock price is kind of like a hit or miss for these binary events, just given the nature of the earnings and of course what Wall Street looks for. So if we do get a retest of 3185 once again, like we did the last time, we gapped down and then we sold off even further, then I would gladly just buy more shares for Amazon as well. But these stocks will move. There's going to be a lot of movement for these companies, and they tend to be very violent after the earnings. Sometimes up, down 3, 4, 5, 6%. We already saw what happened with Snapchat. We already saw what happened with Intel. So there's a lot of analysts that are going to reprice the stock just based on where these earnings calls end up. Kevin, yes, orange juice to the moon. Orange juice for the win here. So let's take a look at Pinterest. So PINS. So Pinterest, $58 is going to be that near-term support level to watch going into next week. And I actually read an article over the weekend that basically said that Pinterest, even at $70, is severely undervalued, and that is going to be a great deal for PayPal to get Pinterest at $70. That would be like a steal for the company. Now, I don't fully agree with what they were mentioning. Of course, they were talking about how Pinterest is becoming like a very, very big discovery platform for ideas, and as a result, turning those ideas into sales from their social media platform, from actual turning it into a full-fledged e-commerce platform. So I do understand the growth potential, but in terms of where the company is today based on revenues and sort of like the earnings and the growth, I do think that $70 is kind of like a fair price that PayPal would be paying if the deal were to go through. It's certainly not undervalued at 70. The valuation remains a little bit on the high end for the company. But of course, depending on the growth rates in the future, Pinterest is expected to grow EPS by 50% north of that, and average revenue per user is going to go up. Their daily active users are going up. Their engagement is going to go up. So I do think Pinterest got a lot of potential, but just today, just based on what they're doing today, $70 in my opinion is kind of like a fair price for the company. But support level $58 going into next week, all the way as low as $48. We did get that breakout that we were looking for. Of course, the catalyst was because of the PayPal potential acquisition, but we got up to that $66 right there before seeing a bit of a pullback here and down close to about 11% from those levels. So very, very volatile stock. Right now, $58 near-term support, 66 is going to be that next near-term resistance. So Man U stock is down. Let's take a quick look. So, well, the market's closed right now, but I do think that this stock is absolutely going to get destroyed tomorrow. It was down over 13.6%, gapped down on October 6th, and right now it's just hovering over $16. So, man, it was very tough. It was a very tough game to watch. As a United fan, you guys have no idea. Let's take a look at Trade Desk. So right now, just coming down 8.7%. So very similar move to Pubmatic. Deval, what was the result against Liverpool? Come on, if you don't know that, you shouldn't ask that from a United fan. It was brutal to watch. Support level for Trade Desk is going to be at $66, $67 a share. So that right there is going to be a level to watch very closely as a support, because again, Trade Desk also trades at a pretty rich valuation, and similar to Pubmatic, it also was affected by Snapchat's earnings, and of course Twitter was down, Facebook was down. So a lot of these companies that are in that social media space were affected. Although Trade Desk has just been phenomenal with those revenue growths, margin expansion, earnings growth as well. Still down year to date, but valuation remains a little bit high for the company. So this is one of the things that I was talking about in with one of my members yesterday, right? In a video call, I mentioned that a lot of times when the stock prices drop, there's not always a catalyst behind that drop, right? Sometimes it's only the valuation getting in more in line with the fundamentals, right? So trade desk, valuation is high, but the revenue growth has been strong, the earnings has been strong, but year to date the stock has not done anything, right? Even though the fundamentals have grown very, very nicely, but year to date the stock is just moving sideways, and that is as a result of the valuation being a little bit too high when the stock was as high as $95, $92 a share, and right now it's just coming down to more of a reasonable level, or this is just the time for the fundamentals to catch up to the valuation. So as the stock price stays sideways, right? So this is a good way to kind of look at this. When the stock price is going up like that, right? The fundamentals are moving up like this, like slowly and steadily, right? Every time they report their quarters, they're moving like this, right? So actually, let me do this in a different color. Actually, no, just let me do this. So fundamentals are moving slowly and steadily, right? Once the stock price starts stabilizing and starts moving sideways, right? That gives the fundamentals here the opportunity to kind of catch up to the valuation, right? They're moving slowly because they're reporting every quarter, right? So they're moving slowly, and then once they catch up and once they surpass, sometimes the fundamentals are much better than the company's stock price and the valuation, then the stock price will catch up once again, right? So not always you'll find companies kind of trading exactly where they're supposed to be trading in terms of a fair valuation. Some of them are undervalued, some of them are significantly overvalued, some of them are actually very, very fairly valued. So keep a close eye at $66, $67 as a support, all the way as low as this right here at $59, $60, and resistance is going to stay put at $92 for the company. All right, 60-second review in Discord on WEBR. What is that stock? So Weber. Come on, Kevin. I didn't make no such promises, but I like how you finesse things. All right, so this right here is going to be a support level close to $14 for Weber, and right now the revenues have been very stable. It seems like from $1.3 billion to $1.5 billion. That's a decent growth. Let's take a look at statistics here. So it doesn't have anything to look for here, so we can just take a look at the balance sheet very closely. So balance sheet doesn't seem like it's got a great one. We got plenty of debt, over $1.3 billion in debt versus cash, which is very, very low at under $150 million, right? So that's not the best balance sheet that we look for. Total liabilities at well over $2 billion, and total assets $1.7 billion. So they've got less in assets and cash versus what they have in debt and liabilities. So that's not good. That's not something that we look for debt ratios and the balance sheet part, or the leverage ratios that we look for. Now, in terms of the market cap, trading at $5 billion on $1.5 billion in sales, that gets us to 1.5, 3, 4.5, a little bit over 4.5. So we're trading at just over 3 times sales for the company. At about $100 million in net income. So 100 to billion is going to be 10, to 5 is going to be 50. So we're trading at under 4 times sales and just about 50 times earnings for this company on a very sort of poor balance sheet. So in my opinion, I would give the opportunity for this company to kind of announce more earnings, get better with those fundamentals, get better with those revenues and those earnings as well. Definitely profitable company, not going to take away from that. So 5.8% profit margin. But things need to improve. I still don't know what the company actually does. So outdoor cooking equipment, so manufacturers includes traditional charcoal grills, gas grills, smokers, pellet, and electric grills. The company was founded by George Steffen. So that's great. I mean, it's got a good concept, but again, what's the moat, right? Manufacturing outdoor sort of like things, appliances. What is going to be the moat, right? Well, how is this going to be a sustainable business over the long term when there's so many people or so many companies rather just making the same stuff? Right, there has to be some moat. So I'll do some more analysis on this. Resistance stays put at $20, support level at $14 for the company in the meantime. All right, let's see. Let's see. AUPH. So up over 26%. Seems like we've done some analysis on this company. So overall, it's just been in this descending triangle. And then we were just kind of trading sideways at $12.50, and then finally broke out with a massive jump of 26% on Friday. So strong breakout here. Kind of making some readjustments here, so get rid of that resistance for the stock, and then just really nice breakout to the upside. So trading at a little bit of an overbought level here, well over 72 for the company. So RSI, at 74 here. The MACD also pushing higher, so it certainly could have some more momentum. The volume was good at 9.5 million, so 3 times more than the average 10-day volume. But I would be careful, just given how much the volatility is going to be for this stock. And of course, the majority of the move has already happened from $11. It's up over 147% in the last 2 months, given where we are. All right, let's see. So, all right. Let's just go over some companies that are reporting earnings, right? So, I mean, we can go over NEO and we can go over like RKLB, like Baba, all we want, but let's just go over some of the companies that are reporting earnings. Because that's going to be really important for us to keep a close eye, because these are going to be the ones that are important for next week. And of course, during our Market Open live stream, I'll break down all the other stocks as well. But yeah, let's take a look at Advanced Micro Devices, AMD. So AMD has had a recent rally here, right? Really nice breakout to the upside, back over $111, $112. And of course, Intel's sort of losing market share and poor earnings was the catalyst behind behind AMD's move higher. And we got up to that as 121, so pretty much almost at all-time highs. The RSI is a little bit on the overbought side, and so is the MACD. So some of the things that I'm watching for is going to be their actual cloud and data server business and how ePYC processors are doing for the demand and how much demand there is. Then of course the Ryzen, the CPU, the GPU market, the computing graphics market, and how that segment is doing for the company. The gross margins, how they're improving for AMD, and Lisa Su's done an incredible job kind of raising guidance. For the last 2 to 3 quarters, the company's done just an incredible job kind of raising guidance for the fiscal year 2021, and of course raising guidance for gross margins as well, as they get more visibility on the demand for their business. So those things are going to be important. Of course, any updates that we can get on the Xilinx deal is also going to be super important for AMD stock because that's also expected to close before the end of the year. So 122 is still going to be that resistance level. That's the all-time high. Support level is going to stay put at 111. I do think that a lot of stocks have been moving higher prior to the earnings. So this right here is the move that started happening a couple of weeks ago, a 21% gain prior to the anticipated great earnings. We got a couple revisions to the upside. So keep a close eye at 122. The RSI is a little bit on the overbought side, and of course, the company announces great revenue beat, earnings beat, strong future guidance, gross margin increases, Xilinx deal update, that all could have a huge catalyst on a potential gap up, beyond 125 and hitting a new all-time high even further. Yes, let's take a look at Chevron here. So CVX, Chevron, Exxon, these companies are actually expected to report absolutely incredible numbers going into next week, and I think that's really resulted in this rally. Of course, part of it is oil prices moving higher. So we've seen oil prices kind of go up 25-30% back up to $85-86 a barrel. So that's obviously been a very nice move in oil, and that's taken Exxon, Chevron stocks with them. Chevron being up from September 20th, it's up a little bit over 21%. Now, I was reading earlier that the earnings for the energy sector are expected to be up over 1,000% year over year, just given where oil prices are, just given how well the recoveries happen for these companies. And the recovery for utility companies is expected to be the lowest at just about 1%. And for tech, it's expected to be around 25 to 30% year over year. So Chevron, I do expect a huge revenue beat. I mean, I think it was ExxonMobil or Chevron. One of these oil companies raised their guidance that the oil prices, increase in oil prices, we're raising our guidance because we're generating a lot of revenue right now. So $113, $114, this right here is going to be that level to watch for Chevron going into next week. We still are a long ways away from the highs set before the pandemic from February, but this has been a nice move to the upside, and I would not be surprised for Chevron's case for us to actually see a breakout beyond 113, potentially make our way back up to 127, 128 levels. So this right here is going to be that next resistance level to watch. Of course, the dividend yield is really strong at 4.75% for the company. So resistance 113 near term, and just given where we are with the earnings, revenues, and what we are expecting, I would not be surprised to see a breakout for Chevron as well. Although just keep a close eye at the RSI as well, just a little bit on the overbought side. The RSI, the MACD, they don't quite matter from a technical standpoint, just based on the fundamentals and the earnings. They do matter just in general, right? If the earnings weren't a case, they would be very important. But right now, since earnings are going to take over the technicals right now going into next week, a lot of things can happen. The stocks can gap up. They can, the RSI can go out of whack for some time before we kind of revert back to the mean. All right, so Facebook we already went over. Nvidia is not reporting right now, so we'll go over that later. Intel we already went over last week. But yes, futures are red at the moment, slightly red. Nasdaq futures down 13 basis points. The S&P is down about 13. The Dow is also down 15. So we're seeing a little bit of a pressure, but of course we have like 6 hours until pre-market opens at 4 a.m. So a lot of things can change before that. So let's take a look at so what other companies are reporting. Let's take a look at Lockheed Martin. So Lockheed Martin has had a really nice recovery, right? From lows of about 337, it's rallied over 12%. So strong move to the upside. Lockheed Martin is also part of Cathie Wood's ARK Invest, like some of their ETFs, if I'm not mistaken. I really do like Lockheed Martin as a company. Really like what they're doing. The dividend yield at just about 3% is very, very good. Stable revenues, stable growth for the earnings as well. Decent margins at just over 10%. But just the revenues have been incredible, right? $65 billion, and they're a big piece of the defense budget in the United States. And of course, their fighter jets are known worldwide. A lot of countries actually buy from Lockheed Martin as well. So I really do like the company. It's a very slow-moving stock. We've made fun of Lockheed Martin. It's kind of like a dinosaur stock in the markets right now. It just moves very, very slowly, but it's got a nice dividend yield. It's got stable revenues. It's got a lot of demand. Lockheed Martin has like contracts with the U.S. government for like 10, 20, 30 years out, right? So there's obviously going to be a lot of demand for everything that they're doing. So keep a close eye. Resistance at 398. So that right there is going to be that next target to watch. We've gone rejected a couple of times here, once, twice, before starting a pullback. Support level is going to stay put at close to 338 for the company. So thoughts on DWAS? Did you mean all right, so what is this? Small cap momentum ETF. So very, very low volume stock here, unless you meant DWAC, Digital World Acquisition. Because this one is very, very low volume. So we're only looking at 41,000 shares traded. This is like a small cap momentum ETF. I really would need to take a look at what the company what this ETF has, like what type of holdings it has. But right now, just consolidating sideways. All right, so you did mean DWAC. So Digital World Acquisition, very, very difficult stock right now. I mean, it's just been crazy momentum, right? It was up over 356% on Thursday, and then Friday it was up another 107%, although there was so much volatility, right? That's one of the things that you can absolutely get burned in these stocks, just given how much the volatility is. The sheer momentum here is insane. I mean, coming in from 130, within a 30-minute time frame, somebody would have been down 50% just because they bought it at close to 131, and the stock dipped all the way down to $66. So there's just a lot of volatility. It's not for me. You guys already know. I mean, the fundamentals aren't there. There's nothing. There's just like pure speculation on this company. This is the definition of momentum trading and speculation, is strictly disregarding the fundamentals. And we don't do that, unfortunately, on this channel. We focus on the fundamentals as well. It's a big piece of our analysis. So it's great to keep track of how this stock is doing, and of course the hauls and everything that's going on. It's exciting stuff, but from an investment standpoint, it's not going to be for me. Could be for a lot of people, but fortunately not for me. All right, let's take a look at Disney. Por favor. All right, so Disney right now just consolidating sideways, right? There's not a lot of movement for Disney, and at the moment, you could make a case for some bullish divergence, but not really, because we're not seeing those lower lows being played out for the price itself. So I would keep a close eye at close to 169, 170 as a support near term, all the way as low as 160. So Disney was included in our subscriber special video over the weekend. The value is a little bit high for the company, so make sure that you check out that subscriber special video that I posted that includes Disney. And the fundamentals are good, right? The streaming service is expected to surpass Netflix in a few years' time. Theme parks, they're opening up new theme parks. They're opening up Star Wars World in California, Florida. They're buying cruise ships, so they're doing everything they can for the recovery of the economy, and of course their demand for their theme parks to come back. But 169 is going to be that support level near term, all the way as low as 160. The valuation still is a little bit on the high end. It's a bit of a hybrid stock, so it benefits from both reopening of the economy and work from home trends. So under lockdowns as well, it benefited from that streaming service. I use Disney Hotstar pretty much all the time to watch any TV shows, movies, or of course Premier League. I watch it on that. So definitely love the platform. But the valuation is a little bit high. So 169, 160 are going to be two support levels to watch. All right, let's take a look at Vertex Pharmaceutical, although they are not reporting earnings, and neither is Disney. So let's take a look at 3M. MMM. So 3M is also very similar to waste management. I would put that in the same category, kind of like an industrial manufacturing stock with a decent yield of just over 3.27%. Stable revenues that have been hovering around $32 billion. Decent margins of 16% profit margin for the company. And the valuation, last time I checked, was really, really low. So just trading under 18 times earnings, 3 times sales, they're returning at over 12 times cash flows, and 12 times enterprise value EBITDA. The balance sheet is also phenomenal for the company. So total debt is a little bit high, 19 billion versus total cash at 5.5 billion, but total assets do exceed the total liabilities. So that's good. And again, these are just some very, very quick pre-screening ways that we can look at these companies and, decide whether we want to do some more analysis and due diligence on these companies. But just let's take a look. Share count has been going down, right? So for 3M, they've been buying back their own shares from 635 million shares to now down to 577 million. So it's been coming down. So that's what we like for these businesses. But definitely it's come down from recent highs of 11, almost 12% drop. Kevin, man, really? I just woke up. I don't even know if the hair is like on point, but 173, 174 is going to be that next support level to watch for 3M. I'm really considering this stock as more of like adding some diversification. Both 3M and Waste Management and Lockheed Martin, these are companies that are more like value plays, very slow moving stocks, but they are very, very essential to the reopening of the economy, to just the functioning of the economy. I mean, 3M produces so many different things. I mean, so many different things for the industrial parts, manufacturing, pretty much a lot of things. So if you look at their product portfolio, like the SKUs they have are just so many of them. So I really like it, really like the company. And we'll consider that in the future for some more sort of diversification and some adding as their economy reopens back up. All right, let's see. Let's take a look at Team. What stock is that? So how do you say that? Atlassian Corporation. So up over 1.4%. Revenue's been growing, but so have been the losses. Trades at 50 times sales, 120 times cash flow. So definitely not for us at the moment. But this has been a strong rally. I mean, just the pattern is incredible for this company, and I'm surprised since 2016 this stock has continued to push higher. So we've gone from $113 up 274%. So strong rally here. They're reporting earnings next week, it looks like, so October 28th. So maybe I'll add this to the watch list, do some more analysis on this, but definitely trades at a very high sort of valuation here at the moment. All right, so we'll just go over a couple more stocks here. Let's see. So Palantir also not reporting earnings next week, but this right here is going to be the complete pattern. You'll notice that we are forming some type of an ascending triangle for the stock right now, just pushing higher but getting rejected at that 50 exponential moving average at that 200 SMA, sitting roughly at $24 to $25. So that is going to be very, very important for Palantir to eventually break out of and regain momentum back up to $25, $26, potentially even get up to as high as $29 a share. So, and support level is going to stay put at $23, $21. There's not a lot for us to go over because there's no earnings. There's not a lot of catalysts coming out here. So resistance 25, support at 23, and right now we're just getting rejected at that moving averages, the 50 and the 200 SMA as well. All right, let's take a look at Vertex Pharmaceuticals, so VRTX. I remain bullish. It was down about 1.9% on Friday, so 186, 185 is going to turn into a resistance here for the company. Support level is going to stay put at close to 166, 177 in the meantime right now, and this company remains very, very undervalued in my opinion, just given where the valuation is. I remain bullish on the stock. So all we can do is just dollar cost average, at least that's what I'm doing, dollar cost average, and just wait for the company. Earnings are going to be first week of November, so it's going to be very important for us. All right, let's see. Let's go a couple more stocks here. C Limited. So C Limited has also been on a nice strong rally. The valuation is a bit high for the company at 27 times sales, 203 times cash flow, and negative 135 times EBITDA. The company's trading at. But revenue growth has been very strong. Maybe I'll do some fundamental analysis on this company right now. But $314 is going to be that support level to watch for C Limited right now, and resistance is actually going to be this higher high close to 442. That's just from a technical standpoint, because we have been perfectly validating this higher highs and higher lows. So this right here has been the entire ascending pattern, and this is kind of like the moving average, or like the mean for the stock. The white line you see on the chart, we've been kind of bouncing off of that support level as well. So earnings for this company are going to be like during the last week of November. So 315 near-term support, all the way to 253. Very interesting stock, but the valuation is still high at the moment. All right, final stock we are going to go over. A couple people talking about Lemonade, so LMND. So Lemonade is also down from its all-time highs, a little bit over 66%. Support level near term is going to stay put at that $58, $59 per share. And resistance is going to be at close to $78, $79 per share for the company. So trades at 74 times sales. Even after this rally, we've seen price to sales come down to 74. I mean, just imagine where it was, north of 150 prior to this drop, right? At over $200 a share, this stock would have been incredibly, overvalued. But $58 is going to be that near-term support level to watch. Resistance, $70 per share. And right now we're just, making these lower highs and these horizontal support levels close to $50 a share. So, all right, that's about it. Thank you so much for joining in for this quick live stream that I wanted to do for before the markets open. There's a lot of stocks to watch. Of course, earnings are going to be very important. I posted in our Discord the earnings calendar and the 10 stocks and their revenue and earnings per share expectations and year-over-year growth as well. So thank you so much for being here. I really do appreciate your guys' support. Hope you guys had a great weekend and are ready for yet another insane earnings week. We got the FOMC meeting in November, so that's going to be important for the economic data. But right now, our goal and our focus is going to be on the earnings and where are the opportunities to kind of buy more shares of some of these companies. So make sure that you check out the links down in the description below for the Patreon. Of course, you'll get the buy sell alerts, find out exactly what stocks I'm buying, and of course, get access to our market updates, the private live streams, the tutorials on fundamental technical analysis, the trading view charts, and the Excel spreadsheet. So there's a lot of value packed in that Patreon. Of course, the fundamental analysis course is also going to be down in the description below. So thank you so much for being here. Really appreciate you guys. Hope you guys have a great day ahead, and I'll see you guys Monday morning for